Good morning, everyone. My name is Luke Tannen. I'm Executive Director of Chicago Innovation, an organization that supports local innovators and entrepreneurs, and a proud partner and customer of Wintrust. On behalf of Wintrust, I'd like to welcome you all to today's virtual event, Managing Business Operations Through a Crisis. I'd say a very appropriate and timely topic for today's world. As we all know, the pandemic has created new challenges as we've shifted business as usual into something totally different. And today's event will be the first in a series of webinars where experts from Wintrust and Wintrust partners will be discussing new challenges from expanded working remotely and how to best attract, retain, and manage a virtual workforce. Today, you will be hearing from experts at Wintrust as well as Whipfly. Now, before I introduce our moderator, I'd like to let everyone know that if you have a question, you can send it to us via the Zoom chat while the event is taking place so our speakers can see what is on your mind and we'll try to respond to it. And also keep an eye out for a polling question so we can learn more about your own perspectives as well. Now it is my pleasure to introduce today's moderator. Please welcome Teresa Fadley, the Regional Manager of Business Banking with Schaumburg Bank and Trust, a Wintrust community bank.
Thank you, Luke, and good morning, and welcome to Managing Business Operations Through a Crisis. As Luke said, this morning's program is hosted by Wintrust and the accounting and consulting firm of Whipfly. Our goal is to provide you with information to help your business weather the impact of the pandemic. The pandemic has caused a number of businesses to shift to remote work, and many of you are facing new challenges as you continue your operations. Our presenters will be discussing the state tax challenges of expanding telework, as well as how to recruit, manage, and retain members virtually. Our speakers today are Jessica Matlin and Lisa Corbell. Jessica is a senior manager in Whipfly's tax department, specializing in state and local taxation. She helps clients navigate the tax laws of the states and local jurisdictions in which they operate. Lisa is a manager in the organizational performance area and assists organizations in finding solutions to human resource challenges and assisting with taking advantage of opportunities that will help make a positive impact to their company's team members. We've got a lot of ground to cover this morning on two very important topics. So without any further hesitation, Jessica, let's get started.
All right, Teresa, thank you so much for that introduction. So today I'm going to be speaking to you about the state tax challenges of expanded telework. I don't know about you guys, but I know when my kids were sent home in March and we were sent home from work, I really certainly did not expect that we would be in the same position 7 months later. But as we have individually each adjusted to our new work situations and our new work routines, it is important that we also take a look at it from the perspective of our businesses and see how our businesses have adjusted and how we must adjust to meet the changing times. Next slide, please. Or, yeah, actually. Could we do the agenda slide, please? Sorry. Thank you. So today we're going to be talking about three different tax types and really how they've been impacted by the change in where we work. So we're going to talk about the payroll tax implications. And in that, we're going to really talk about new withholding requirements, a little bit about long-term remote work versus short-term remote work and how that interplays with the state's rules. And then also the competing rules among states as it relates to individual income tax. We're also going to touch on the sales tax implications. Really how the new and expanded activities in various states are going to result potentially in additional sales tax filings for a company. And then finally, we'll talk about income tax implications in the states and what it means when you have a physical presence in a state that you did not previously have a presence in. And then we'll talk a little bit about Public Law 86-272 and exceeding the protections that that federal law allows, which we'll get more into that again when we talk about the income tax implications. Next slide, please. So as we all, went from working in an office to working at our homes, Some people took that as an opportunity, with the kids out of school, everybody able to do everything remotely, to, land at maybe their vacation home, whether it was a lake home or a beachfront property. I know sitting in Illinois, March was a great time to get out of the state. So many people did. And, I think at the time, little thought was put into, well, what are the consequences of moving from Illinois to another state? A state in which maybe your employer doesn't typically file, whether that's withholding or, any other sort of tax. So today we're going to talk a little bit about the implications of that move, and whether it was a temporary move or if it's turning into something more permanent. So we can move to the next slide, please. So the states have offered, various approaches, if you will, to how they are going to handle remote work as a result of COVID-19. In Illinois here, Illinois actually just changed their withholding rules on January 1st of 2020. So the new rule is that anybody that is a non-resident that is working in Illinois for greater than 30 days, the employer has the requirement to withhold on those wages. With this change, Illinois came out very early in the pandemic and said, we are not changing our new rule based on anything related to, telework from COVID-19. So Illinois offered no relief because of the pandemic and is moving forward with the rules as they were in effect as of January 1st, 2020. On the flip side of that, you've got states like South Carolina that have offered temporary relief. So South Carolina is one that I use as an example because it was well thought out, I believe, in the way they did it. So South Carolina is going to offer temporary relief for withholding, and their relief actually runs from March 13th, 2020 through the end of the calendar year, so through 12/31/2020. And I point this out because there's a lot of states that have come out and said, as long as the telework is related to the pandemic or to COVID-19, we will offer temporary relief. The question is, when does the pandemic end, or when does the response end? It's kind of an open-ended question. So what South Carolina has done is that they have put the date of 12/31/2020 as the stopping point for when their temporary relief will end. Now, does that mean that come December 31st, if things are worse or the same, will South Carolina extend that? That is certainly a possibility. But what is to be appreciated by that is the fact that South Carolina has been very clear about when the temporary relief will end. Other states have taken the position that, anytime that we're under any sort of stay-at-home order, or if you actually test positive for COVID-19 and you've got a doctor's note, then there will be certain situations in which the withholding rules would not apply. Again, the complexity and the issue with that is really related to the fact that there's not a hard stopping point. There's not dates that you can rely on. It's really just the circumstances of the state and whatever stay-at-home rules may apply for that state during that time frame.
So Jessica, do these rules apply in states that have reciprocity agreements?
That's a really great question. So the good part about the reciprocity agreements is that those reciprocity agreements would, trump any sort of new withholding requirements that you would have. So for example, Illinois has reciprocity with both Wisconsin and Iowa. So if you are an Illinois resident that normally works in Iowa, but now you're working from home in Illinois, you're not going to have to worry about Iowa's withholding requirements because of reciprocity and the fact that you'll only ever be taxed in Illinois anyways. So in states with reciprocal agreements, there's a lot less concern over where your employees are working than, say, a situation of Illinois and Indiana, where there is no reciprocity agreement. So if you normally work in Illinois and you normally have your, Illinois wage withholding, and now all of a sudden you're working from home in Indiana, then your employer may, end up having filing requirements in Indiana to withhold on your wages. So in this case, reciprocity agreements become very important and are actually very beneficial to employers.
Jessica, just one more quick question here.
Sure.
So how is it incumbent upon the employer or the employee to determine what they're supposed to be doing here? Because this seems very complicated. An employer may not even know that their employee is working in a different state, right?
Exactly. So it is really important that as an employee, we make sure that we're letting our employers know where we are located when we're performing work for them. So an employer is not going to know if you're logging in from your computer in Illinois or if you've gone to Michigan, to your lake home for a couple of months. They're not going to know unless you tell them. So I would say if you're an employee and you're working in a place that's not your normal place of employment, I would encourage you to go ahead and make sure that your employer knows that. And then on the flip side, it's really important for employers to know where their workforce is located. So employers really should try to identify and communicate with their employees to figure out where they're doing work and really whether that work is on a permanent basis or really more temporary. As this has gone on for longer periods of time, I'm certainly seeing clients where they're spending more time in their second home, let's say, than they are in their primary residence. And so as it becomes a more permanent situation, the question is, well, have you actually moved to this new state? Is it no longer temporary, but is this more of a permanent situation? And so really that's going to come in with these challenges for individuals. States have competing rules sometimes when determining, who gets the piece of the pie. So an individual earns wages and they've worked in 2 states. And so really, if we just think about it, the 2 states should be able to come up with a reasonable way to split that income. However, the states, since they can all act independently of one another, have made rules that are oftentimes competing with, maybe a neighboring state or, just any state that somebody may choose to work from these days. There's 2 real rules that kind of are in contrast with each other. So one is the convenience rule, where a state is going to say that, and let's take New York, for example. So New York is a convenience rule, and it says that if you are an employee and you are working in another state outside of New York for a New York employer, for the convenience of the employee, then those wages would still be considered New York. However, if you are working outside of the state of New York at the request of the employer, then your wages would be able to be sourced to the other state and not taxable in New York. So the issue with that is that New York has not come out to say whether it views the pandemic and people kind of dispersing to their home locations to work as convenience for the employee or because of a requirement of the employer. So there is some expectation that unless New York comes out and actually explicitly says their stance on the issue, there is a chance that that may end up in some litigation, because there's going to certainly be people that are saying, I wasn't working from home because of a convenience to me. It was because my employer's office was closed. And so I think that is an interesting challenge that we could see coming up here in the next next year or so. Contrast that with rules that say, if you're physically located in the state when you're performing this work, then that state is going to lay claim to those wages. So let's take Illinois, for example. If you're physically located in Illinois when you're performing the services for your employer, you're going to be taxable in Illinois. So if you're working for a New York employer, you're working in Illinois, New York and Illinois are both going to be at odds saying, no, this is our income to tax. So that's how we end up with states with these competing rules that may result in double taxation. I want to be cognizant of the time, so I'm going to be a little bit brief with the residency discussion. But the other thing that really individuals need to pay attention to is their individual residency. And is that going to end up being challenged because of where you chose to work on a temporary basis? So for example, Maine, let's say somebody went and they decided to spend March through December in Maine because they could live wherever and that's where they chose to do so. Maine has explicitly come out and said, we're not going to give any relief for our residency rules due to COVID-19. So if you have a permanent place of abode in Maine and you spent 183 days or more in the state, then they're going to treat you as a resident of that state. So that's important to keep in mind, largely because you may end up in a situation where all of a sudden, you're a resident in a state that you've not previously filed in, and you've missed your estimated tax payments. There may be penalties associated with that. So it's just something that should be considered, hopefully sooner rather than later, as to the implications of that. The one last item that I wanted to note in regards to the individual tax and the withholding and how states are treating it is that the one thing that the states do agree on is that if you go from having a temporary work situation to a permanent situation, then none of the temporary relief for COVID-19 applies. If your living situation is such that your employer, as a result of the pandemic, says, hey, you know what, you can do your work remotely, you do a fantastic job, we don't care where you live, just log in, then maybe your position becomes permanent. And then that really reverts to the back to the old rules as far as whether withholding is required from your employer.
So then, Jessica, to clarify, if there is a physical presence, then the economic nexus no longer becomes the test for a nexus?
Yeah, so we're going to talk about that now here with the sales tax piece of it. Oh, could we move forward 2 slides, please? And one more. Thank you. So yes, so that comes into play on sales tax. So a quick brief history here on sales tax. So prior to 2018, the states had required a physical presence in order for a state. So a company had to have a physical presence in order for a state to impose its sales tax rules or impose its sales tax filing requirement on an out-of-state company. And in 2018, there's a Supreme Court case, it was Wayfair versus South Dakota. And South Dakota had drafted rules that created an economic nexus. And so that means it's the economic connection to the state that would allow the state to impose the sales tax on out-of-state companies. And so this kind of flew in the face of everything that had historically been the rule. And so now, as a result, over the past 2.5 years, almost, or at least 2 years now, all the states have responded. And so now a lot of the states are relying on these economic nexus rules to really capture out-of-state companies and have them be responsible for the sales tax in the state. A remote employee moving to one of these states where maybe a company has not had physical presence before and maybe didn't even have economic nexus may result in a company having a sales tax filing. So the important piece here is that I think we've all kind of switched our focus, to economic nexus, and really that's the driver for when we have to file sales tax. But physical presence and the physical presence creating nexus never went away. So if we all of a sudden have a workforce that is located in these various states, they are creating a physical presence in those states, which would likely result in a sales tax filing requirement in the state. There are some states that have come out and said, if this employee is only here because of the pandemic, then we are not going to consider that creating nexus for sales tax purposes. So New Jersey, for example, came out and they said, if you have somebody in the state because they're working temporarily because of COVID-19 and you're below the economic nexus threshold, then we're not going to consider that creating nexus for sales tax purposes. the concern is that a lot of states have not come out to say anything. So for example, Texas has really been silent as to any sort of relief. So one could assume that no relief is provided in Texas. So if you end up having an employee working in Texas, you're going to end up with a sales tax filing requirement. And the issue there is that for remote sellers, so sellers that are located outside of the state, they are often not often, I guess, but they're occasionally given the opportunity to collect at a simplified rate. So one sales tax rate for the entire state. And this is the case in Texas. And so if you're no longer considered a remote seller because you've got someone teleworking from Texas, then all of a sudden you not only have a sales tax filing requirement in Texas, but you also have the requirement of collecting the state and local rates, based on where your customer is located in the state. So there are kind of these, this ripple effect to having somebody teleworking from the state. So the other point I want to make about sales tax, and I know we're getting close to my time, but the other point I really want to make about this is that the importance of sales tax and getting that filing correct is that that is a tax that a business can pass along to its customer. So if it's done in a timely manner and you're able to collect at the time of the transaction, that ends up being your best case scenario versus maybe it's not addressed and 2 years down the road, the state comes and asks about it, and then the business is left paying that bill when otherwise it could have been, recouped from your customers. If we could change the slides. The next thing we're going to talk about is income tax and the implications of the telework on that. We can go one more slide, please. So in the agenda, I mentioned Public Law 86-272, and I just want to take a couple minutes to really explain what that is. So Public Law 86-272 is a federal law that provides protections for interstate commerce. So the goal is that if the only connection that a company has with the state is that it is shipping product, tangible personal property, into that state from outside the state, and it only goes into the state for the mere solicitation of sales, then federal law is going to protect that company from being taxable in another state. So for example, if somebody is in Illinois and they are only shipping product into Indiana and their sales reps will go into Indiana and solicit the sale of this tangible property, but that is all, then Indiana does not have the ability to impose the income tax on that Illinois company. Now, this is important because this law is two things I want to point out about this. It only applies to the sale of tangible personal property. So it does not apply to the sale of services. And it only covers the mere solicitation of sales. So if there's any sort of install, any service that follows up with that, anything that exceeds the mere solicitation is going to really blow the protections under Public Law 86-272, and a company would be subject to income tax in that state. So if you've got employees working in the state and they're not just soliciting sales, then all of a sudden you no longer have these protections that you've been afforded, for the prior years. Now, states have come out again, and there have been some states that have said, if your employees are only here doing activities that exceed, Public Law 86-272 because of the pandemic, then we're going to offer temporary relief. The large part about that is just really keeping track of where are my employees, what are those states' rules, and how is the business impacted. So if you're, take South Carolina, you're good through 12/31/2020. What happens in 2021? Some of these other ones, California, that one offers nexus protection as long as Governor Newsom has a stay-at-home order in place. So whenever that stay-at-home order ends, then really you need to see, if you're exceeding those protections and now all of a sudden have a filing requirement in the state. Similar to the individuals, if we are not aware of where we should be filing for 2020, it is likely that there's some underpaid estimated taxes and there may be penalties associated with that. The main thing here is that the overall expectation, even before the pandemic, was kind of, the states have been increasingly aggressive in the past few years. First there was Wayfair, so there's this push to find these new filers that could be on the hook for some sales tax filings from 2018 through now. And now, as we're seeing states struggle to make it through the pandemic and with the lost tax revenue, the real expectation is that we are going to see an uptick in the number of audits that the states perform, whether that's a year from now, a year and a half from now. So it's really important that we take this time now to really collect the information we need to analyze, what sort of risks do we have? The next slide, please. So the other piece of this is that, we really need to collect, I'm going to take this slide a little out of order, but I think it's really important that as employers and human resources, we collect the data from our employees. So survey the employees, find out where they're located. Let's put tools in place to identify and track where people are located. I know, at least internally at Whipley, we have our timekeeping system, and we can indicate where we are when we're performing that work. And so if you have, maybe you have tools like that, maybe they haven't really been utilized previously because your workforce was centrally located, but now with everyone kind of dispersing, it's really critical to gather that data. You're going to use that to determine, do I have anything else I need to be worrying about, other than just keeping employees engaged? So why is this important? Why is it important that we gather this data? It's important so that you can really identify these tax implications. Do you have a withholding obligation that you didn't even realize? You didn't even realize somebody was working elsewhere. Do you have sales tax or income tax implications that we need to address? Hopefully before year end of 2020. Are there issues where you should have unemployment insurance in certain states where you don't currently have it? Or are there potentially, workers' compensation implications? So those last two really are not tax implications, but it just kind of shows how, when workers go everywhere, there's a lot of factors to consider. And through this in here, is federal help on its way? I mean, I think, anybody that watches the news, that's unlikely, right? So I think our government is kind of busy with a few other things, but there has been some attention around standardizing, with employer withholding requiements. I think, certainly our state reps have noticed that this is an issue, and they've proposed some bills, but it's really unlikely that anything is going to pass, largely because the states individually really have no interest in kind of getting locked into this national plan where they feel like all of a sudden they're not going to get as big of a piece of the pie. So certainly in the times that we find ourselves in, where states are very desperate for cash, they're not necessarily putting the ease on the employer as their number one concern. We can go to the next slide. So that concludes my presentation for today. I really appreciate your time, and thank you for spending your morning with me. My information is on this slide. If you have any questions or want to talk through anything, I'd be happy to do so. Otherwise, I really do encourage you to collect the data that you need to really analyze your tax situation in the various states. And if you have any questions, reach out to your trusted business advisor at Whipley, or feel free to reach out to me, and I would be happy to help.
Jessica, thank you. That tremendous amount of information to cover in 30 minutes. And the takeaway for me is businesses really need to start collecting data for the past 7 months, and then also starting to plan for 2021, because we'll probably be looking at doing the same thing come January 1st that we were doing on March 13th. So thank you again. Well, we learned about some economic aspects of telework on your business. Now Lisa's going to take us through the effects of COVID and telework on our workforce. Lisa?
Hi.
Hi.
Thank you for joining me on this discussion about management trends during COVID and beyond. So if I can have my slide presentation up. Yeah, so where do we begin? Well, I'm going to go through a few management trends that we know about. So let's talk about the first slide. Go ahead and yeah. So we know that there's going to be long-term impact on the way companies function. And this will be definitely a telltale sign of a company's strength and health in the future. And so some long-term impacts on management trends are also on our approach to remote work. The effect on compensation practices also we have seen some changes. So I'm going to go through the first, if you want to go to the next slide. We've learned a few things that organizations that seem to be successful have managed through COVID well. What are some of their characteristics? And as we go through these 7 characteristics that are on the slide, give yourself a point for each characteristic that you feel that your organization has. And at the end, we'll see how you do. So what we know that successful organizations frequently assess the situation. Do you have a committee, and how often do they meet? Is there a mechanism in your organization to get people together fast? Do you have a Teams chat that you can rely on to get people together fast? So do you have a system to frequently assess the situation? So if you think that you do, go ahead and give yourself a point. Successful organizations have agility. They can adapt to change fast. Are your people empowered to make adjustments quickly? Do they have access to decision makers, to people that they need to talk to adapt fast? Give yourself a point if you feel your organization has agility. Successful organizations are resilient. They can bounce back quickly after a crisis. So is your organization, does it have a supportive, no-fault environment to get back to normal? Or is your organization and culture more where employees blame each other for downturns and blame each other for mistakes? We're finding that companies that are resilient are also allow risks and allow failures. And those things are not punished, but are used as learning lessons. So are you resilient? And that also means do you have the workload capacity to bounce back? So when you're going to bounce back, it's going to take a lot of work. Do your employees have the workload capacity to put in the extra work, or are they already strung so tightly that they cannot put anything more on their plate and thus don't have the workload capacity and don't have the emotional enthusiasm to go ahead and bounce back? So give yourself a point if you think that you are resilient. Successful organizations were already in a digital transformation. They were ahead of the game and they continue to move forward. So if you weren't ahead of the game, that's okay, as long as you've done a lot of catch up. I've heard some of our IT people say that things were done in 5 months during COVID that employers were projecting to do in 5 years. And so if you managed through that pretty well, then go ahead and give yourself a point. Successful organizations use multiple channels and avenues to communicate to their employees. So did you do that? Did you use email and texts and phone messages and other types of communication to reach everybody. I guess I would be interested in the chat box if you could put in what type of communication did you use to communicate with your employees? So if you have the ability to give me a chat, something maybe unique, I'm always looking for and to learn new avenues for communication. And as we go on, if any of those come up, will we have a chat here? Oh, email, message through ERP system. Okay, absolutely. So that is taking your internal processes that you have and utilizing those to communicate with employees. Phone, emails. Okay, well, keep them coming. We use Teams, absolutely. Team, you can group people, etc. But what we found out is that using multiple channels is the best way, and also communicating often. So successful organizations communicate often. Now, I gave this presentation and somebody made a really interesting comment. That's what I love to do about presentations, is they said, our organization commented so often that people started to ignore it. Very good comment, and I can see that. If I'm getting a message every day and my inbox is full, you know, how important is that message? So that was a very key point there. We've found that successful organizations also have embraced the remote work culture. And so we're going to talk about that. And so how did you do? Did you get 5 to 7 points? If you want to go in the chat and if you want to acknowledge your organization, did you think you did pretty well? Or do you think you have some room to improve? So I'd be interested in knowing that. And so now let's talk about some remote work. So if I could have the next slide, please. So we know that successful organizations embraced and are embracing the remote work. So let's do a poll. What percentage of your employees are working remotely right now? So if you want to go ahead, we'll put that up for 30 or 40 seconds. So is it less than 10%? Is it 10% to 25%? 26 to 74? 75% or more? Okay, how's our poll doing? All right, good. And this is what we would expect if we go ahead and go to the next slide, where it says that 43% of us say that over 75% of our employees are working remotely, which is not surprising with our audience today. So we can go ahead and close the poll. So remote work, what we found, it's doable and it provides advantages. In a poll or a study done by Global Workplace Analytics, 25 to 30% of the workforce will be working from home multiple days a week by the end of 2021. And according to Upwork, in a recent report, 56% say remote work has functioned better than expected. 62% believe their workforces will be more remote post-pandemic than pre-pandemic. Definitely agree with that. And there are reasons that employers see this increase and are okay with this increase and are offering these remote work opportunities for those who can work at home. And where employers are seeing the advantages in the areas of recruiting, retention, and engagement. Next slide, please. So recruiting, retention, and engagement. these are areas that should be considered anytime you make a decision about total rewards. So that's my area, that's my niche, that's my passion, is total rewards. So when we talk about total rewards, we're talking about compensation, benefits, perks, other things that anything that makes you want to work at your employer. That is total rewards. So when I talk about making retention, recruiting, and engagement key factors in your decision making about total rewards, I'm saying that if the impact of a decision is not getting you further in your ability to recruit, in your ability to retain, and in your ability to engage, then you need to take a step back and look at that decision. Because those are the three elements that will move your business forward if you can positively affect that. So let's talk about recruitment. So PayScale says that 48% of organizations offer remote work opportunities as a benefit in 2019. So remote work opportunities is seen as a benefit. Why is it seen as a benefit? It saves time by removing the need to commute. It provides flexibility to live anywhere, including working while traveling. Now, I don't know how much of a benefit that is. I suppose if you're traveling for pleasure, being able to be online is not such a benefit. But I can see where working while traveling, you can get some things done. It provides more flexibility to manage both work and life outside of work. And it can be conducive to increased productivity through the elimination of office distractions. So let's talk about the retention and benefits. If you want to go ahead and advance the slide. So for retention, the benefits of remote work are employees can relocate and not have to quit. And we have seen this with Wifley. It used to be that we would be glad if people could relocate between offices because we had a lot of them and we would retain that employee. Now it doesn't matter. You can relocate to Arizona, which I'm not sure we have an office in Arizona. I'd have to look. But that person can do that, and we can still retain a very qualified employee. Retention. With remote work, organizations can hire talent. So not only retain and hire, but we can have these people essentially work from anywhere. This eliminates the restriction or the excuse of a lack of diversity in your talent pool. This diversity drives innovation and improves community within an organization. And why am I bringing up innovation and community? Well, innovation and community are qualities employees seek now and cite as a reason to stay with an organization. If they see diversity and community and people like themselves and our new millennial workforce, which isn't that new, they are used to having a variety of ideas from a variety of people, from a variety of backgrounds. And so if they join a company that they don't see that as a plus at all. They see that as a negative to the organization, and this will adversely affect your retention. Remote work opportunities are also appealing to people with disabilities or conditions who find an in-office setting challenging. People who would make excellent employees, excellent team members, but need to work from home for a variety of reasons, for disabilities, in a variety of areas, and usually incorporating these people into your organization is really good because they very frequently are very loyal and long-term employees. So it's going to open up a whole new array of available employees, which in today's environment is very, very good for employers. Because we have less employees. When we get out of the COVID, we're going to go back to an employee shortage, I'm sure. Next slide, please. Engagement. So when we talk about making decisions, we want to make decisions also on total rewards that engage people. And remote work opportunities show that the company is concerned about the employee's work-life balance. So employees who are engaged tend to say that their companies care about them and that the company is concerned about their balance of work and home life. I also put some ideas here about work and balance home life. Something that can disengage employees is what's called burnout. So I want you to watch for this. I want you to understand that burnout, what it can do to motivation. So from an employee standpoint, the working at home can definitely be an advantage, but employers should not take advantage of that and turn it into a negative. And why is that negative? Well, employees feel that they're always online. Very true. The employees can be exhausted by the change in routine and their multiple responsibilities that are happening right now. So we shouldn't really expect that they're going to work more necessarily than they had in the past. Employees can feel disassociated from the organization, and that's where that communication comes in, where successful organizations do things, virtual happy hours and meeting every day as a group at a certain time, but making that connection. Also, disengagement can be from lack of connection with coworkers. All right, the next slide. So we also know that about long-term management trends is there's going to be some change in compensation, and we've already seen that. I put up a few here. One, compensation is not only in wages, but there has been some tax-free emergency payments that are now allowed to employees, and that can pay for reasonable work expenses due to the pandemic. What we suggest is that you develop a policy and you establish a maximum for that. One company that we work with gave everybody the same amount, and they acknowledged that individuals working at home have increased internet, they have paper costs and printer costs and other costs that you would not have of going to work. So establishing something like that is really a nice benefit that you can give your employees, and it is tax-free. And if you have any questions about that, it probably won't be me, it'll probably be Jessica. But there are some new avenues in compensation. Other thing that we're starting to see is hazard pay. And this is usually a temporary increase in pay for a particular time for employees that maybe have to come into the office and are not feeling that great about that. So you want to incentivize them, or you want to give them some extra pay to do that. Another thing we are seeing is a lot of people are picking up extra work from coworkers who have to be out because of the pandemic. So maybe they themselves are sick. Maybe they have family members who are sick. Maybe it's a daycare / school reason that they're out and they can't work remote. But we are definitely hearing that my management team has gone from 10 to 7 now, and people are working like crazy. So what do I do about that? I'm saying hazard pay. It could be called a lot of different things. And in fact, in the chat, if you want to tell me what you guys may have called it, but it is some extra pay to acknowledge that some employees are working more because of the pandemic for a variety of reasons. And then we also have the incentives. And that is more of a bonus for a period of time. Maybe it's an extra month because of a situation. And in all these situations, we would recommend that you have a policy and you do to get the benefit of the policy, you want to let employees know ahead of time that, you know, we're doing this and we are acknowledging that you are having extra work. Next slide, please. So we've talked about what we know. Work has changed forever. I don't think we're going to go back on the remote work. I don't think we're going to go back on the way companies function once we found out what works and what doesn't work. But there are some things that we don't know. We don't know what future legislation is going to bring as far as economic advantages for businesses. Again, are we going to get more stimulus? We don't know that. From a human resource perspective, we don't know how health privacy laws will be affected going forward. There has been such a turnaround in health privacy laws for the good of our country. But if you would ask me 2 years ago, can we take our employees' temperature and can we send them home if they have a sniffle, and can we ask how they're the people they live with if they feel well? The answer is no, you can't. We had the Americans with Disabilities Act to contend with. We had HIPAA to contend with. Just lots of things. There was lots of privacy initiatives that we needed to be considered. But now there's been exceptions because of public health needs. So we can take temperatures in the workplace. We can do contact tracing. Of course, there is still a line, and we believe that the line is that, yes, tell your employees what they need to know. For instance, that an individual has tested positive in your organization. You don't need to say who. Clearly, like everything else in the workplace, they will probably know, but it does not have to come from you. And so you should have a policy established as to what are we going to do if somebody tests positive, and what are we going to do to have to make sure that the employees who are at work do not have any symptoms, etc. So it's going to be very interesting going forward as to if the lacks of the health privacy laws are going to continue, or if they will stringent up a little bit and go back to where they were. I think that when we get into, once we have a vaccination, that's going to be another health hurdle that we're going to have to address. We're going to have to definitely take and look at the state and local laws and definitely work with your health department. Do we have a question there in the chat box, Teresa?
Let me check on that.
Okay, I saw something come up.
That came from Vicki, and she's got, for remote telehealth consultation, what cloud-based applications do you recommend that adhere to HIPAA privacy laws?
We would have to get back to you on that. So Teresa, if you would like to take that question.
Absolutely.
I don't know off the top of my head. But thank you for the question. We are seeing telehealth be such a factor. And boy, those people who got into telehealth before the pandemic, they're so far ahead. A lot of our health plans were already doing this. And of course, we didn't really think much about it. We thought it was kind of new age stuff that I would talk to my doctor through my computer, right? Wow. But telehealth, those who embraced it early, definitely it's been just a godsend for this pandemic. All right, so 5 more minutes left. How about some questions for me?
Any questions? If you have questions for either Jessica or Lisa, please just pop them into the chat box. Seeing none. Lisa, thank you very much. You know, the takeaway from your presentation is that the remote working environment, employers and employees, given the fact that on January 1st of 2020, we never would have thought that the percentage of the American workforce would be working remotely. The nimble way that we were able to respond and to deliver results really speaks to the level of professionalism that we're seeing across companies, small businesses that we're banking at Wintrust. I'm sure your clients as well. So a lot of very, very good information. And Jessica and Lisa, both your presentations really tied together as the workforce grows. Understanding those tax implications and how that's going to impact your business is critical. So with that, I leave you this morning to reach out to Jessica, to Lisa with more questions. Contact your Wintrust banker with questions. If you want more information or additional resources, please reach out to us. The contact information for Lisa and Jessica is up on the screen, but we'll also be sending out some additional information to you later today and tomorrow as a follow-up to this presentation. And then if we could have the slide up for our upcoming programming, which we have another webinar scheduled for November 18th. And that will be on the Business Enterprise Program. So more information, more details to come. I want to thank you all very much for participating this morning. I want to thank Chicago Innovation for helping us put this together. And a special thank you to our partners at Wipfli, Jessica and Lisa, for your time and information. Thank you all very much. Thank you for joining us. As one of my colleagues says, we're finishing on time and under budget. So thank you. Thank you all. Everyone have a great day and stay well. Take care. Bye-bye.